Good morning and good afternoon, everyone. Thank you so much for taking time out of your busy schedules to join us with the amazing Miss Ruth King today. We're going to be talking about 5 mistakes to avoid this summer as it relates to financials. Ruth, take it away.
Thank you, Jennifer. It's good to see you, and I'm thrilled to be with you all well, in my area, it's afternoon. In where Jen is in Seattle, it's still morning. So good morning, good afternoon, whichever it is. Let me share my screen, and we will get started.
So, you guys, for those of you joining, we do this on a monthly basis. I think we're skipping a couple months. Are we skipping or did we already skip?
We already skipped when I went to Greece.
Yes, we actually had an amazing time in Greece. So these are recorded. So if you are not able to attend, make sure to register. I see lots of you guys joining right now. Make sure to register. That way you automatically get the recorded session afterwards, and then we'll post some short blurbs and so forth on social media just as friendly reminders and updates as we go. So let's rock and roll.
Sounds good. Thank you, Jen. All right. It is busy. It is probably one of the hotter summers that we've had in a really long time, except for in Seattle and in the Northwest. It's your slower time of year. So there should be no reason in the world that any of you up there make any of these mistakes because you're not rushing around like crazy, like chickens with your head cut off. The rest of us, it's been nuts. It's been crazy. It's been the hottest summer I've seen in Atlanta in a really long time, and we've needed it. So I'm going to talk through the 5 bookkeeping mistakes to avoid this summer. And it doesn't matter how busy you are, you still have to do these things. First of all, thanks to CI Web Group for hosting this, and also thanks to you all for carving out a little bit of your time in this very, very busy time of year. So, yes, busy bees, busy bees, busy bees, busy bees. So this is what we're all running around making honey and all the other fun stuff that goes on at this time of year. But there's still some things that you have to do. You have to produce accurate financial statements, even in busier times. You can't, all right, I'll take care of it next month and I'll put it on next month's financials. No, I just literally got off the phone before this webinar where we have a situation of financial fruit salad, and I'll explain that to you what that really and truly means as we go through this, because it's one of the 5. You have to produce accurate financial statements even in busy times, and I'm going to share with you some of the things that we've done over the years that have helped you specifically carve out more time to make sure that you get your financials done. All right. So in this session, we're going to talk about the 5 greatest bookkeeping mistakes that I've seen when it's really, really busy. 1 or 2 ideas to help you in the busy times, and what you absolutely have to do even in the summer when it's busy. All right. For those of you who've been part of these series for a while, I've been around. My goal in life, my reason for being on this planet, is to give you the tools and processes to get and stay profitable, build wealth, and significantly impact your life and the lives of your employees. That's what I'm here for. Those are the 6 books I've written. They're all on Audible. They're all on Amazon, and they're all on ebooks and Kindle. So the bottom 3 are really, not that the top 3 are not important, but the bottom 3 really and truly have to do with understanding P&Ls and balance sheets and what they're all about, and dumb, stupid mistakes that all of my clients have made over the past 40 years or so from there. So let's get into it. All right. Number 1 is not closing the books on time. You still have to close the books. Not waiting does not do anybody any good. If you need to come in on a Saturday, come in on Saturday and close the books. Okay. My big issue that I have with summer, it's a huge cash flow positive time of year. It gives you a very big false sense of security that everything is going okay. I can't tell you how many contractors over the years have sent me emails in September, October, November going, we had great cash flow this summer, but when I paid the bills, I was broke. That's not the idea here. The idea here is to have great cash flow and great profitability this summer and collect your bills. All right. Make sure it's profitable cash flow. In last week's Contractor Sense, which is a free email that I send every Monday, I have the where to log on if you want to get that. I talked about raising your demand service rates $25. Now it's busy. Everybody needs you. They're not going to notice an additional $25. And this is the time of year to do it. If you do it in February when it's slower, not so much. All right. So accurate financial statements have to be produced no later than the 15th of each month. That is your job. That you absolutely have to do. And then you'll be able to see whether there's profitability issues. Remember, cash hides a lot of profitability issues. So if you're not doing your P&Ls, cash, remember, is a balance sheet thing. P&Ls are profit or loss thing. If there are, you want to take care of them now rather than having no cash in the fall when all of your bills are paid from the summer. Okay? And then are there inventory issues? This is where I really see a lot of things happening in the summertime because people go, oh, I need a motor, I'll go get 3. Or I'll need this and I'll go get 4. Or they think, oh, I might need this on my truck. And I've seen handfuls taken out of service parts rooms. This is where the inventory issues start. And since you're so busy, nobody's paying attention to it. Inventory is the bet. I don't care whether it's busy or it's slow. The procedures have to be in place. Make sure you're making good bets. And then collection issues. You're too busy to collect. Well, guess what? If you don't collect, then, let's assume you don't send out a bill and it's 3 months or 2 months before you send out a bill. Somebody's going to get that and go, gee, that was done 2 months ago. Did they really do all that? Or they obviously don't need the money, so I'm going to wait 2 months to pay it. And right. Neither of which is good. Right? Jen, you were going to say something?
No, I've seen this.
Oh, yeah. Oh, yeah. All right, let's talk about financial statement fruit salad. All right, this is what happens in the summer a lot, and it screws up your books big time. So anyway, I get a text from the owner of a company. I mean, they did really, really, really well in June. And his comment to me was, is there a financial statement fruit salad? And it turns out the answer was yes. And what financial statement fruit salad is revenues not matching expenses for producing those revenues. So for example, in May, they had revenue, but they had more expenses than revenue. So their gross profit was negative. You can't have a negative gross profit. Think about it. It's like buying a part for $1 and selling it for 80 cents. Doesn't work. So a lot of those revenues that were never billed in May got billed in June. So in all reality, what we really should do, but we're not going to do, is we should average May and June from a perspective of revenue and average May and June from a perspective of equipment and material cost to get the real, what I consider the real numbers for May and June. So you want to absolutely make sure that if you have revenues, you have the expenses against those revenues in that month. So what happened? All right. If you think about it, the guys are really, really busy. They're selling jobs, they're ordering equipment, and the work's not going to be done until the following month. So what do? That equipment goes into inventory until you're actually able to bill it. They don't care. I mean, they're just ordering, the stuff's coming in, it's getting on your books, and the revenues aren't being generated to cover those expenses. And we have ups and downs or even negative gross profits, which we know is not right. So materials purchased, if you are not going to bill it that month, are inventory rather than cost of goods sold. Otherwise, you're going to see ups and downs and negatives and positives and things along those lines. We need to be able to make sure your pricing is correct, okay? The other thing is closing a month before all the expenses are in. Now, I know some of you, and I hear this all the time, some of your subs decide they don't need to get paid, so they don't send you an invoice for 3 months. And I've seen it over and over and over again. In those cases, close the books. If you know a vendor or a sub's not going to send you an invoice, just close the books. No sense in keeping them open to wait for 2 months until somebody sends you that invoice. Okay. All right, number 3 is to ignore your weekly cash flow report. Now, this is a copy of a weekly cash flow report. If you want the report, I'm happy to send it to you. The email address will be at the end of this. but you're going, why in the world am I creating a weekly cash flow report? Because cash is so plentiful. Well, yeah, cash is plentiful, but we want to know what you had to start, what you brought in, what you spent, what's left, and what you think is going to happen next week. All right. And this is why at the end of it, it's the last thing you want to do on Friday afternoons and put it on the owner's desk. And you want to include a copy of the aged receivables and aged payables. I should say aged D instead of S. Sorry about that. And what this does is the owner can look at it and go, okay, we better start making collection phone calls because this is getting to be 60, 90 days. I don't care how busy you are, we need to collect our money. And here are the bills I want paid this week. And he just circles them. And you'll prepare the checks for a signature and it's done, okay? It also forces you at the end of every week to be up to date in terms of billing because you don't want to do an aged receivables if the billing's not accurate. So there's methods to the madness. And it also can track cash flow. It's really important to track cash flow, even when you are busy. All right, number 4. This is the other thing I've seen so many times. Not billing or getting the customer signature for financed work. No joke. I walked into a client's office in August, and on his desk were a pile, probably, I'm not joking, maybe 9 inches tall, of work that had been completed that they hadn't gotten the customer signatures on. Not joking. Oof. Think about how many thousands of dollars that was. I hit the freaking roof. You gotta get your customer signatures for financed work. I mean, make sure, and at the very least, get the crews to do it. The salesperson should do it on coming back, but he's gonna go, I'm too busy. I'm selling more jobs. Somebody needs to go back and get the customer signatures, all right? Or if you have a commercial perspective and you don't bill for 2 weeks, that's 2 weeks longer that you don't get your money in the door. All billing and all signed paperwork should be done within 24 hours of the completed work. Many, many contractors I work with have taught role play, whatever you want to call it, with their installation crews to be able to handle the customer signing off on the paperwork so that they can get paid and they bring it back, right? Salespeople, crews, somebody's responsible for getting customer signatures. Figure out who it is and make sure it's. And then reconciling will absolutely let you know whether they've done it. If you know that a job has been done, the paperwork should have been in, and you don't see the deposit into your checking account, you're going to want to know why. You're missing that $8, $10, $20,000 of financed work. You'll see everything that has not been deposited in your checking account. And that leads me to number 5, not reconciling. All right. Bank statements. You'll know whether you've received the payment from customers who financed and other people who have, obviously written checks or that type of thing. And those of you who are bookkeepers on here, I mean no disrespect, but we just found out the person the bookkeeper was faking the reconciliations. Let's just leave it that way. And we found it. Make sure they're accurate, right? Get all the paperwork, get all the reports, all of the reports that prove that the reconciliation was done. Credit card receipts are probably better to actually reconcile every day or every week because by the time the end of the month comes, it's never the same as the days that you do it. For whatever reason, I have never figured out how MasterCard, Visa, and American Express and Discover actually do it, but it never comes in exactly on the day that the account was charged.
Yeah, also for anybody that's taken online payments and utilizing a credit card processing platform online, those transactions are coming in batch accounts, very difficult to reconcile. It's a batch deposit and being able to tie those back to what invoices they're attached to. That's tough. Don't save it till the end of the month.
Yeah, do it every day. In a lot of the companies, we take accounting students who are going through college on an accounting, they're going to have a 4-year accounting degree. and we give them real world experience, and we teach them how to do these credit card receipts every single day. Let them get frustrated.
Yeah,
They're 20
absolutely.
years old. Let them do the frustration.
Absolutely.
All right. And the other thing is credit card payments. It's really easy right now if you don't reconcile the credit card payments for somebody who's going to get gas to slip in a hot dog or slip in a drink or slipped in, all the other fun things that they can. And
Oh,
you've got to get them, you got to let them know that you're watching, even though it's busy, and, don't let them get away with that.
yeah.
All right. So those are the five. Here's some things that have helped many, many, many of my clients is close your door. Now, I don't expect you to close your door for an entire day, but what you'll do is you'll put a sign on your door and say, please do not bother me unless the building's on fire, my kid got in an accident or something like that. And I've put these on doors, and it includes the owner. I'll be out with, by 10:30 or by 11 or whatever the time is. Close your door for a reasonable period of time. People will learn not to bother you. That also means put your phone on do not disturb. You will get so much done in that hour. It's amazing. I had one CFO who was just couldn't get anything done unless she came in on weekends. And so I literally put a sign, we created a little sign, the ones that are the write-off signs that says, please do not disturb. I will open my door at such and such a time. Okay. And everybody learned to abide by it. She opened her door by whatever else it is, and she actually got her work done. So she didn't have to spend all weekends there, even in the busier times of the year. Now, year-end closes and stuff like that, she still preferred to come in on weekends because nobody was around. And she could spend, 4 or 5 hours, didn't have to worry about closing her door, but that was her choice at that point. It wasn't consistent. All right, number 2 is to assign specific tasks to a specific day. And here's what I mean by this. Whatever payroll day is payroll day. So if you have to get payroll ready on Tuesday to get it into the bank so that they get paid in all their bank accounts on Thursdays, Tuesday is payroll day. You do nothing on Tuesday until payroll is done. You might take Monday as accounts payable day, Wednesday as accounts receivable day, but billing still should be done every day. And, reconciliation days and stuff like that. But just take, and say, all right, every Monday is AP day. Until all the APs are in, all the AP is done, I'm not doing anything else. All right. Tuesday is payroll day. Until all payroll is done, I'm not doing anything else. And at the end of the day, you probably have time to do billing or something else like that. Wednesday is making sure that all the bills are in for the entire week, all the payments are made, et cetera, et cetera, et cetera. Thursday could be inventory day. You decide what you want to do every day, first thing in the morning, and that gets done until it's finished. Friday is usually my catch-up day, and obviously the end of the day is to do the weekly cash flow report. But I find that if you say, Monday's AP day, Tuesday is payroll day, it helps you put in silos what you get done every day, and you actually get a lot more done than trying to do a little piece of AP and then a little piece of AR, then a little piece of payroll, then a little piece of billing. You go crazy. So just,
Yeah.
assign it in silos. And
So there is a very cool tool. There's a lot of them, but there's the one that we use is called Reclaim.ai. It's an AI tool that you can put in what are your critical high leverage activities. It automatically connects with your calendar, and it will automatically make sure that you have those HLAs booked on your calendar on a repeated basis. It'll block those times and help control it a little bit if you're forgetting to do it manually. Your calendar's open, but you've got a sign. So if you can utilize AI to force you, you can go in there and say, these are critical high leverage activities I'm responsible for. Please make sure that I have time on a weekly basis to be able to take care of these. And it's smart enough to be able to adjust your schedule to take care of that.
yeah, and then pay attention to it.
Yes. It'll send you reminders. It'll send you a text. It'll send you an email, but you still got to do it.
Yeah, you absolutely have to do it. There's no sense in doing that unless you're going to actually do it. All right. So what you absolutely have to do when it's busy, number 1 is weekly cash flow report. And I think we've talked about that ad infinitum. Number two is to reconcile bank and credit card accounts. I mean, both credit cards coming in the batches and credit cards where your employees and everybody are charging things to their credit cards. And be very careful with Home Depot and Lowe's. And oh my gosh, this is the time of year that those two slip in a personal project here and a personal project there. Be very, very, very careful.
Yep.
And then produce accurate financial statements by the 15th of each month. If you have to spend a Saturday to do that, I go spend your Saturday to get it done, because they have to be analyzed to make sure that nothing's happening. You're not building up inventory where you don't. Your receivable days are getting longer than they really need to be, because those things, if you wait until fall, they'll be totally out of whack and there will be crisis mode rather than being able to solve them and resolve them now type thing. Okay. You might take every Thursday morning and do collections. Who knows? You decide what you want to do, when you want to do it, but just stick to it. All right, so here's some gifts. If you want a complimentary review of your financial statements, we're happy to do it. If you want to get on the Contractor Sense podcast, the e-zine, it's 5 minutes of reading, or the podcast is 20 minutes every Monday. The new podcasts come out. The podcast is also on iTunes and Spotify and everything else like that. Or you want the weekly cash flow report, just send me an email, rking@financiallyfit.business, and I'll make sure you get all of it. And if you want the financial reviews, I'll send you what you need to send me. Okay, it does stay confidential. Doesn't go anywhere. All right, any questions?
So as a reminder, you guys, if you have any questions, feel free to use the webinar chat in your control panel at the bottom of the Zoom, and we'd be happy to get to those. I would just remind everybody to take advantage of those tools that Ruth put out there. We get busy. I'm an owner. I've got 300 employees. I understand how easy it is to spend your day fighting fires instead of being strategic. So you've got to feed your mind, automate your schedule as much as possible, and block time for those HLAs. And if you don't know what the HLAs are, you just got 5 of them. But it's very, very important to document. There are, in all of our businesses as owners, we've got to figure out what are the things that only I can do. Those are your top priority HLAs. That list will get shorter over time as you bring in subject matter experts to be able to take off some of those things off of your plate, and your list of things that only you can do gets smaller and smaller and smaller. But when it comes to financials, as an owner, you carry all the liability, which means you carry all the responsibility. So we've got
to for the review.
Yes.
And for the review.
Yes.
And your list will get shorter and shorter up to a point. There will be things that'll always be on your list. I'm sorry, even if you had 1,000 employees, Jim, it would still be on your list. You will find that you will have many more meetings instead to review and that kind of thing. But there are some things that never come off your list. Sorry.
Yep, 100%. Keep your eyes on the prize.
Yeah.
If it's related to financial, that's staying there.
Yeah.
Ruth, as always, thank you so much. No questions at this time. I really appreciate your time, and thanks to all of you, Darlene and Sarah and Scott and Crystal and Wakaz and so forth. If I didn't mention your name, thank you again for taking time to be with us today, and we look forward to seeing you on the next one.
Thank you. Have a great rest of your day and be profitably busy.
Let's go.
Go for it.
Bye.
Bye.